Welcome back to Investing Dog Podcast.
Good to be here.
Today, we're taking a close look at First Horizon Corporation. We've gathered recent reports, some analysis, and for someone like you wanting to get up to speed quickly but thoroughly, we've sort of boiled down a lot of info.
Trying to find the key insights about this regional bank.
Exactly. Our goal is really to help you understand what's driving First Horizon's performance, what it might mean going forward.
Without getting lost in, all the tiny details.
Right. Okay, let's unpack this.
So maybe start with the basics. First Horizon, they're headquartered in Memphis, Tennessee.
Okay.
And their bank, First Horizon Bank, it operates across 12 southern U.S. states. So they have a pretty significant regional presence down there.
12 states, that's quite a footprint. And what kind of services are we talking about?
Oh, it's broad. It's not just, checking and savings. They do commercial banking, private banking.
Consumer and small business stuff too, I assume.
Yes, that too. Plus wealth and trust management, retail brokerage, even capital market services like fixed income.
And mortgage banking. Seems like a full suite.
It really is. Asset-wise, recent reports put them somewhere between, let's say, $81.5 billion and $82.2 billion.
So a substantial player.
Definitely. And their focus seems to be on providing, capital and advice to clients and helping their communities grow.
Okay, that makes sense. Now, you mentioned recent performance. That's where it gets interesting, especially Q1 2025.
Right. The first quarter highlights were generally positive. Net income for common shareholders went up.
How much?
It hit $213 million, which works out to 20 to 41 earnings per share.
And that was up from the previous quarter.
Significantly.
Yeah.
Up 12 cents from Q4 2024.
Wow. What about adjusted earnings?
Adjusted came in at $217 million, or 0.42 cents per share. That was actually down just a penny from General Auto's 43 cents in Q4. So pretty stable there.
Okay, a slight dip on adjusted, but a big jump on the main net income figure. And management's outlook.
They seem pretty steady. They kept their guidance for the full year 2025 the same.
What you mean?
They're expecting low single-digit loan growth. They also see positive pre-provision net revenue growth, PPNR.
And credit quality. Any concerns there?
Well, their guidance for net charge-offs is between 15 and 25 basis points.
Which sounds manageable.
It suggests manageable credit risk levels, yes. Nothing alarming in that guidance.
So this kind of strong Q1 showing, it could reasonably boost the stock price, wouldn't you think? Reflecting that focus they mentioned on safety, profit, growth.
It often does. Good numbers tend to get noticed.
Yeah.
And that stable guidance, despite, whatever economic uncertainties are out there, that signals some confidence from management.
That low single-digit loan growth expectation. It sounds cautious but steady.
Balanced, perhaps. Growing, but not maybe aggressively reaching for risk. And keeping charge-offs in that range is key for investor confidence.
Okay, shifting gears a bit from just the numbers, there was also news about First Horizon as a workplace.
Ah, yes, the recognition they've received. That's an interesting angle.
They were named one of Newsweek's America's Greatest Workplaces for Women for 2025.
And it's not the first time they've been recognized, right? Fortune and Forbes have listed them as a top employer before.
Repeatedly, it seems. So this raises a point, doesn't it? It's not just about the financials.
Could be a real intangible strength. A strong corporate culture, commitment to diversity, inclusion. These things matter.
How does that sort of thing potentially impact the bank's performance, though? Is there a link?
Well, think about it. Good places to work tend to keep their employees longer. They can attract better talent.
Lower turnover, maybe better productivity.
Possibly.
Yeah.
And happier employees might lead to better customer service, which indirectly helps the bottom line over time. It suggests they value their people.
An interesting dimension beyond just the balance sheet. So thinking about their market position, they're a leading regional player in the South.
Correct. And that means they have competition.
Who are they typically up against?
Other regional banks operating in those same southern states. Think Regions Financial, Fifth Third Bancorp, Synovus Financial, names like that.
Some of those might be bigger in terms of total assets.
Some are, yes. But First Horizon seems to leverage its reputation and that wide range of services we talked about.
So competing on service and maybe regional focus rather than just sheer size.
That appears to be part of their strategy. Building on that regional strength, the diverse offerings, and maybe that employer reputation helps too. It carves out their space.
Okay, every company faces headwinds, though. What are the potential risks for First Horizon?
Well, like any bank, they're sensitive to interest rate changes. That directly hits their net interest margins.
Always a factor. What else?
Regulatory changes are a constant possibility. Things affecting capital requirements, for example.
And the broader economy, of course.
Naturally, consumer borrowing, business investment, that all depends on the overall economic health. And while that credit charge-off guidance is moderate now,
It's something to keep an eye on.
definitely needs monitoring. But on the flip side, there are opportunities.
It's like that strong Q1 momentum we discussed.
Exactly. That indicates they're executing well right now.
Yeah.
And that workplace recognition,
Could help with keeping good staff.
potentially a real plus for retention and attracting talent. Plus, having all those different service lines, banking, wealth, capital markets, it adds stability to their revenues. It's not all coming from one place.
Right, diversification within their own business. It cushions them a bit.
It can, yes. Spreads the risk, provides multiple avenues for growth.
Okay, what about the stock itself and how analysts are seeing things?
Well, recent commentary seems to suggest things are pretty steady. No major volatility or big negative events being flagged.
And good financial results usually
Usually lead to positive analyst sentiment, or at least stable sentiment. The commentary around mid-April, when guidance was confirmed, showed continued confidence.
But for the actual up-to-the-minute stock price?
Oh, for that, you always need to check reliable sources directly. Yahoo Finance, the company's own investor relations page. Analyst views are just one piece.
Got it. So always do your own homework beyond the ratings.
Absolutely essential. Analyst views are helpful, but they're based on the available info and models at a certain point in time.
So let's try to tie this together. What does all this information about First Horizon mean for you, the listener?
Well, for one, looking at First Horizon gives you a kind of snapshot into the health of regional banking, specifically in the southern U.S.
And it's interesting how we've discussed both the financial results and the workplace culture aspect.
Right. It provides a more, let's say, holistic view. You see the numbers, but also get a sense of the company's internal strengths or potential vulnerabilities.
The stable outlook they projected, the risks seeming manageable for now, it suggests a degree of resilience.
It points towards resilience, yes, especially considering the broader economic climate can be uncertain.
It really highlights that interplay, doesn't it? Financial strength potentially attracting good people, and a good culture maybe boosting performance.
It can be a virtuous cycle. One often supports the other. First Horizon seems to be demonstrating that possibility.
Okay, so wrapping up, First Horizon looks like a fundamentally pretty sound regional bank. They've got positive momentum from recent earnings.
And that workplace recognition isn't just fluff. It speaks to internal health, which is important.
But let's be clear, like any bank, they face external risks. Economic shifts, regulatory changes, those are always there.
Always part of the landscape for financial institutions.
Which leads to a final thought, maybe something for you to mull over. How much weight do you give factors beyond the pure financials, like a company's reputation as an employer? How does that influence your view of its long-term stability and potential for growth?
It's a really interesting question, something worth considering as you navigate the investment world.
Indeed. Well, if you found this discussion insightful, please do subscribe, like, and maybe leave a comment with your thoughts.